as always. Hope to see you more often. Shirish Pardeshi is FMCG Analyst at Centrum. He's joining us right now to take some questions. And of course, I mean, the big one is Lever, right? HUL. Shirish, how would you view this increase? In terms of earnings downgrades, it's not much, right? 2-3%, that's about it. Would you, I mean, as I was saying, you can look at it and say, well, you know, now this is done. For the next 4-5 years, nothing changes. Or does this raise fear that there could be more changes down the line? How would you see it?
Good morning, Prashant. Thank you for having me on the show. Two things. I think one clearly states here, and management did confirm that yesterday, that India is one of the top 3 key markets for Unilever parent. Now, in the context of rising the royalties, I think one has to keep in mind the explanation provided by the management is saying that if you break up that royalty, 1.9% is basically from the brands what Unilever has put it in India, and the balance is coming from the shared services. So though it is front-ended, and I think that's where concerns has been raised, and maybe because of that there is some earning downgrades. But we have to also keep in mind the delivery in terms of the quarter which has gone by, and look at the growth what company has reported in the detergent business. So 32% growth on a YY basis is a humongous growth. And somewhere we need to give this credit to the management capability to deliver this kind of growth in such a tight environment. The second point which I've said that Unilever has a very strong growth framework. And if I use the example, they have used this WIMI strategy, winning in many India. And over the last 4-5 years, they have been able to trade up the consumer. And I think somewhat we might want to relate it as a premiumization story, but there is a humongous work which is there. And these all things justifies that the kind of royalty the parent is warranting at this point of time.
Okay. I wanted your thoughts also on Asian paints. Now, there are multiple headwinds playing out here, right, Shirish? On one hand, the management themselves are cautiously optimistic about demand picking up. There was no volume growth this time around, and there is intense competition in this space as well. If you are a long-term shareholder here, would you churn out?
Good morning, Sonia. I do share your concern at this point of time. But when you actually do the deep dive thoughts, I think Q3 is a very big quarter for most of the discretionary spends which is happening, starting from your wedding season, your festive season, and these all things which has happened. But you will also need to observe that and draw your attention saying that this time, almost till 15th to 20th of October, we had rains in the country. And if you stretch your thoughts, maybe UP, Bihar also had the prolonged rains and we had floods. So this is an impact. While I would say on the other side, when you look at the management did confirm that in the month of December, they have seen a strong double-digit growth. So I think, yes, we being analysts on the street, we will look at the short term. But when you look at the long term, I think the growth fundamentals are very intact. The other attention I would draw, and I would be betting big, and I will not churn the stock at this price. Rather, on correction, I would add. The prime reason is that if you look at the history of last 20-25 years for Asian Paint smartly ahead of the demand capacity has increased at least 2 to 3 years in advance. Now, yesterday also, Mr. Amit Singhal confirmed that they are putting another greenfield plant, spending another 2,000 crore for the water-based paint. Now, that capacity, when you see that, I think gives the confidence that management knows what they are churning and what they are trying to deliver.
Okay, so if you want to just wrap it up for us, Shirish, what would your top picks be in this space, considering that there's quite a bit of, there's this sort of cloud of caution amongst most of the companies. What would you buy? What would you avoid in the universe that you track?
I think given a merit, yesterday what HUL management and did, even Amit Singhal confirmed that rural demand is going to come back. And I think there are some green shoots, both the management has confirmed. While when you look at the high frequency data and looking back, the macro headwinds, which is going away, the good news is that the inflation is coming under control. And I think that's where I would bet. I would put my money behind high growth rural companies. That's one part. Second, directionally, what we have seen and given to understand, the packaged food and food companies are going to deliver very strong growth. So I would bet on the food companies higher, while the BPC and personal care growth is little away. But going by the seasonality change and the prolonged winter, I would still say that the BPC can play in a medium to short term.
Okay, all right. Thanks a lot for joining in, and have a great day. By the way, a couple of stocks that I want to mention in pre-opening. Just take a look at HUL. It's now down quite a bit, actually. It's down almost